Hey guys, how's it going? My name is Hamish Hodder and today we're going to be talking about how you can find winning stocks in under 5 minutes. If you're new around here, this is the 6th video in a series about low-risk stock market investing. We basically talk about how you can buy really great businesses at really cheap prices and therefore guarantee the returns that you're going to get into the future. Of course, if you're new around here, make sure you subscribe and leave a like, and let's get into it, guys. So there are a lot of different ways that you can find out about stocks, and of course you would know if you've been looking into the stock market. You can do Google searches, find out what people are writing articles about, what people think are good stocks and which ones are bad stocks. You can read the news, you can watch the news. There's often a lot of people get recommendations from their relatives or close friends who have encouraged them into the stock market. However, the best way to find as many good stocks at once and make a short list of them is to use a stock screener. And we'll go into a little bit about which stock screeners I use and the benefits and the cons of using free stock screeners versus premium stock screeners. So of course, as expected, the really good stock screeners that allow you the most customization, allow you to refine your searches down to exactly what you want, which would be, for our case, it would be high growth in sales, earnings per share, equity, and free cash flow. So the screeners that are going to give you the most customization in that area, they're going to cost you. And ones like Morningstar and Zacks has a premium one. They offer a lot more, but they're really expensive. And if you're just a new investor, or even if you're not a new investor, if you're just investing small amounts of money, you don't want to be paying $300, $400, $500 a year for a subscription to some sort of analyst membership. And that's pretty obvious, because if you have, let's say, $1,000 in the stock market and you're expecting to get 15% returns, you're expecting to get a return of about $150 in your first year. But if you're paying $300 or $400 for a stock screener, that's eating away all of your earnings, all of your profits from that year of stock market investing, and some more. And even if you're investing, say, like $10,000, which is a fair amount of money, if you're investing $10,000 and you're expecting $1,500 in returns, you don't want to be paying a third or a quarter of your profits to some analyst company to find those stocks. So, like myself and many others you will, you'll use a stock screener that's free. And there are some good ones out there, and the difference between the free ones and the premium ones is basically just that the free ones you can do, they're less customizable, so you're going to get a longer list of stocks and you're going to have to do a bit more digging into each of those stocks rather than getting a short list of all the stocks that would be perfect buys for you straight away. So when I'm looking for stocks, the main stock screeners that I use are, there's a free Zacks stock screener on the NASDAQ website. So if you just search NASDAQ stock screener, that will come up. And that's quite good. It's got a few numbers. It's got sales growth, EPS growth, it's got your debt levels, it's got return on investment. It's got a few things that are useful in narrowing down what kind of stocks you want to be looking for. Another one that's really good is the FinZiz stock screener. That one I had a little bit trouble working out how to use. It's a little bit complicated, but that one also has those same numbers. The downside to those two is that it doesn't have all the numbers that I'm looking for. And I'll go into in a second exactly what numbers that we want to be looking for if you are using a premium stock screener. So basically, like in my other videos, there's a couple of main things that we look for when we're looking in stocks. So we're looking for high growth, or growth of 10% or more in the areas of earnings per share, sales, equity, and free cash flow. And so you want to be screening for those things. However, most of the free stock screeners, as far as I can tell, don't allow you to screen for equity growth or free cash flow growth. The other things we want to be looking for is a high return on investment capital, or return on investment. It's the same thing. So we want to be looking for 10%, 10% over the 1 year and the 5 year. And some of these screeners allow you to do 5 years of earnings per share and sales, which is really good, so you can do that as well. And the other thing that we look for is the levels of debt. These are usually available on the free stock screeners. So I'm talking about the current ratio, which is current assets divided by current liabilities, and the other one we use is the debt to equity ratio. So basically, I'm just going to explain what I would put in if I had the perfect stock screener. I had full customization of everything, which I'm sure some premium stock screeners allow you to do. So basically what I'd look for is I'd look for earnings per share growth of 10% or more. I'd screen for 5-year average EPS growth of 10% or more. I'd then look at sales growth from the last year of 10% or more, and of course 5-year sales growth of 10% or more. And I do the 1-year and the 5-year for both equity and free cash flow, as well as the sales and earnings per share. All of those I'd screen for above 10%. Then I would screen for return on investment or return on investment capital of above 10% for the 1-year and the 5-year again. I would screen for the current ratio being above 2 or above 1.5. I would screen for the debt to equity ratio being below 0.5. And I think that's about it. Yeah, I think that's about it. Oh, and lastly, of course, I would probably screen for stocks that have a market cap of above $1 billion. And that's because you can find great companies that are really small. However, the companies that we're really interested in looking into investing in, they're big companies that have been around for 10, 20 years or so or more. And generally, these companies have a market capitalization of more than $1 billion, usually multi-billion dollars. So once you've gone out there and you've screened, you've put a couple of these metrics in, or all of them if you're lucky enough to have a premium stock screener, and you will come up with a list of stocks. And basically what you want to do is you want to go through them and you want to look at the industry and you want to Google search each of the companies and find the ones that are interesting to you and shortlist them. And why I say find the ones that are interesting to you and not just shortlist all of them is because when we're investing, a really crucial part of investing is that you invest in companies that, one, interest you and that you know a little bit about already, or that you would be willing to go to the effort of learning more about that company and the industry in which it lives. And that's because you just have to do a lot of work in stocks, and not a heap of work, but you want to enjoy what you're doing. You don't want to be like, oh, got to read the annual report today. You want to be excited about it. You want to be like, okay, where is this industry going? Like if it's tech, you're like, I'm so excited. What's new in tech? What is my company going to be doing this year? What are they looking into the future to do? What kind of developments are they doing? What investments are they making? And that's what's going to really make your investments great at the end of the day, is if you put in a lot of effort, you're going to find out everything about that company, and you're going to not slack off, and you're not going to get into a company in which you don't really know much about and make a critical error. So then once you've got this short list of stocks that have fulfilled at least 1, 2, or 3 criteria that we look for and that are interesting to you, or the industry is interesting to you, then what you want to do is, over a period of however long you're going to be researching these stocks, you want to pick each of them and you want to do a full analysis. And if you want to know how to do a full analysis, I have 2 really good videos on them. One is on how you can tell if a company is worthy of investment, whether it's a good company or not, financially. And the other video, is it shows you how you can accurately value those companies once we've worked out that they're great companies. So essentially, you just want to do a full analysis of each one, and you won't get to the end of each analysis of every single stock on your list. You're going to start the analysis, go through the motions, and you're going to come across something that doesn't quite fit what we're looking for. Maybe the 10-year equity growth is like 4% or something, and it's only recently been good, and it's not. There's no long-term indication that this company can continue to, in the long term, grow its equity. Then maybe you stop looking at that one and you start on the next one. And you keep going until you do full analysis of a couple of stocks, and then you will have a list of stocks that you would be willing to invest in, and you will also have the price that you're willing to pay for them after doing the valuation. So then you will have your winners list, and this is a list of stocks that you will watch over a period of 1 month, 2 months, 6 months, a year, maybe even longer. And you will just wait patiently, and you're going to be a disciplined investor, and you're going to wait until those stocks reach the buy price. You're going to keep learning about that stock over the time. You don't have to spend hours every week researching it. You can just keep track of it. If the annual report comes out, maybe give it a quick brief overview, read the letter to the shareholders, see what their numbers are, update their numbers, and redo your valuations to see if it's still a good stock. And yeah, and then just wait patiently and wait till you can buy them at the right price. So that's it, guys. That's how you can find winning stocks in under 5 minutes. I hope you guys enjoyed. If you did, make sure you leave a like, leave a comment, let us know your thoughts. What ways do you guys look for stocks? Do you just read the news? Do you just keep up to date? Do you Google search? Do you use stock screeners, and which ones do you use? I'd love to hear from you guys. And of course, if you haven't subscribed already, make sure you subscribe so you keep up to date and you can continue on in this series about low risk stock market investing. And I hope you guys have a great day. I'll see you in the next one.